So first and foremost, right, this is an example is a market which is in an uptrend. So if you know a market is in an uptrend, then you only want to identify area of support on the chart. And the way I do it is to identify areas, levels on the chart where the market bounce off higher. So you can see over here, this is one example, market make a pullback over here, bounce off higher. Made a pullback over here, bounce off higher. So what I'll do is I will draw area of support over here. There's one over here, and there's another one over here. Now, how do I kind of like fine tune my level? So the way I like to do it is that I like my area of support, right, to get as many touches as possible. So you can see that this black line over here that I've drawn, right, I can actually shift this black line up higher and take into account these lows over here. So that's what I'll do right now. So I'll adjust my area of support and push it up slightly higher. So this way, I got multiple touches. I got this one touch over here and two touch over here. So same for this over here, right? This one over here, I'll push this up slightly. Okay, so when I do this, I now got 3 touches. I got 1 touch, 2, and 3 over here. And what about this one over here? I think there's another area of support over here. I'll draw this one here. You can see that if I were to draw here, right, I would either have to consider touching this line or push it down lower to touch this line over here. So again, what I usually do is that is either you're going to leave it at this line or you'll leave it at this line, because there's no way to get both of them being touched. So usually what I'll do is I'll take into account the more recent one and push it to somewhere here. Okay, and another tip to share with you is that support and resistance, they are an area on your chart, but I like to draw it as lines on the chart. This is my habit. So what if you want to do, you can also do is you can draw it as an area. Just use the rectangle tool on TradingView over here. You can see rectangle, click on it, and you can just highlight it as an area on your chart. So again, you can change the color if you want to. This is gray. Okay, you can just draw this as an area on your chart. And then over here, you can draw it as an area on your chart as well. So this kind of like reminds you it's an area and not a line on your chart. So I'll remove this for now since I prefer lines, my own personally. And another thing to also share with you is that when you draw support and resistance, I typically have not more than 2 areas on my chart, because if you have too many, you're going to feel overwhelmed. You might be thinking, Rainer, you know, what about this one over here, right? This is another level you can draw. What about this one over here? Another level that you can draw. And that's true. Those are levels that you can possibly draw. But here's the thing. This will just clutter your chart with a lot of unnecessary information. And I usually just want to keep only the 2 most recent one. Why is that? So let me explain. So let's say, for example, why don't I have this particular level over here to leave it as support? Well, think about this. If the market comes down all the way to this level, at this area of support over here, the market reversed down lower, do I still want to be buying at this price point around 114.50? And the answer is no, even though it's an area of support. Why? And the answer is this, is because by then the market is no longer in an uptrend. Let me repeat, right? By then, if the market reaches this area of support, it's no longer in an uptrend. You can visualize the price action. At that point, the market is likely to be in a downtrend. And if the market is in a downtrend, I want to sell at resistance, not buy at support. So this is why I usually just have not more than 2 areas of support on my chart. So I'm just going to remove all the additional one. This, remove, remove, and remove. So my support and resistance will look something like this on the chart. And also one more thing to add is that this level over here will be significant. Why is that? Why is this level significant? So recall about our uptrend invalidation. The uptrend will be invalidated right when the price breaks below the swing low that precedes the breakout. Yeah, so this over here is the swing low that precedes this breakout over here. So this high is the breakout point over here, and this is the swing low that precedes the breakout. So at this point, if the market comes down lower and breaks and let's say close below support, this market to me is no longer in an uptrend. It possibly could go into a range or even a downtrend altogether. So this is what I call the the last line of defense, if you want, the last line of defense where, support must hold. If not, right, the entire market structure will shift from an uptrend, right, to something else like a range or a downtrend. Now, another example, right? Look at this chart over here. So let's do a quiz, right? Pause this video if you have to, right? And visualize, ask yourself, how will you draw resistance, right, in this downtrend? Where will you draw your area of resistance in this downtrend? So I will, do my version of it. You can pause this video and see, identify which levels you want to draw, and then we can compare and see whether your answers is similar to mine. And really, I want to say that there's really no right or wrong. This is just my own preference, my way of identifying resistance. If you have your own method that works for you, that's great. But if you're new, you have no idea where to start, then can try using my method first, right? And then from there, you can fine tune to what works for you. So for me, again, right, how I would do it is, again, I like to pay attention to the 2 most recent highs, the 2 most recent levels where the market actually, declined from. So this is one I've identified over here, and then possibly another one over here. So notice how the market over here, it consolidates, right, then head down lower. Then over here, reaches this highs and then head down lower. So this will be the two area of resistance that I will draw on the chart. So I think I will leave this as it is, right? And again, why I don't have so many resistance area, why I don't have it here, why I don't have it here, again, is very simple. If you imagine this, right? Imagine from where the price is right now, let's say the market rally up higher to these highs. Do you still want to be selling at this price point over here? Do you want to be selling here? Probably not, because this market is likely no longer in a downtrend. It's probably in an uptrend. And in an uptrend, as you've learned, right, you want to be looking to buy at support. So again, this is why I just typically have just the two most recent resistance on my chart, and that's pretty much it. So in this case, let's say if the market comes up to this area of resistance, this is where I can look for selling opportunities, right, to short this market. But of course, I don't just blindly, sell when the market comes to this price level. There's another thing I still look out for, which I'll share with you really shortly. But for now, this is how I would draw resistance in a downtrend. And finally, right, how do you actually draw support and resistance in a range market? So again, the concept is similar. You want to identify the levels, the areas on the chart, right, where the market has a huge swing, right, or huge decline or rally from it. So if you look at this chart, this is a key area because the market has a strong collapse from it. This is another one, right, another strong collapse. Now what about the lows, right? So this will be a key one as the market did rally up higher from it. This is another one, strong rally. This is another one, strong rally. So once you identify these key points where the market just keep getting rejected higher and where it keep getting rejected lower, this is an area on the chart where you want to pay attention. So in this case, right, recommend using a rectangle tool so you can better identify your support and resistance. And of course, if you want to use lines like me, it's your choice as well. So this would be my area of resistance, and for area of support will be somewhere about here. Okay, you can see try to get as many touches as possible. So you can see for this area of support, right, we have this 1 touch, 2, 3, 4, 5, 6, 7. This one over here, 1 touch, 2 touch. Okay, so actually this one here, I might even shift this up a little bit higher to take into consideration this lows as well. Okay, so you've learned how to draw support and resistance like a pro. So now using what you've learned, right, let me share with you a powerful trading strategy that allows you to profit in bull and bear markets. Let's get to it. Okay, now let's have a look at some trading examples so you can see how you can use the concepts that you've just learned, right, to trade the market. So you learn a support and resistance trading strategy that allows you to profit in bull and bear markets, right? So first thing first, remember, right, what is this market structure? You can see this market is in an uptrend, and when the market is in an uptrend, we want to be buying as much as possible at support. So let's identify our area of support, right, on this chart. So if you ask me to draw it, I'll probably have this one here, okay, and possibly another one over here. Okay, so you can see that these are the two most recent swing points, right, on the chart. Next, let's see what happens next. So what my plan now is that if this were to happen, right, I'll be looking for buying opportunities, right, at this first area of support, or possibly this second area of support. If the price comes down to here or here, it's unlikely I'm interested to look for buying opportunities. I'll probably look at some other markets instead. So let's see. So the market heads down lower, comes down into this area of support. Let's see what happens next. Now over here, we have a hammer. So if you remember, a hammer tells us that the buyers are temporarily in control as they have managed to, push the price and close near the highs of the day. So this is a valid entry trigger to go long. So let's say we go long on the next candle open. So I'm just gonna, let's say, have a line, right, to signal that we go long on this next candle open. Let me just remove this box, right, so I don't confuse you. Okay, so now this green line represents our entry price, right? Okay, so if the market opens the next day, right, this is our entry price. Now, what about our stop loss? Our stop loss is something that I've not covered yet, but generally when I set my stop loss, I like to have it a distance below the area of support. I don't like to set it just over here because the market could possibly come down lower, hit my stop loss, and then reverse up higher. How many times have that happened to you, right? So this is why we want to set our stop loss usually a distance below the lows. And one way to go about doing it is that we can actually use the ATR indicator to help us with this. So just search ATR, pull it out. I typically go with a 20 period ATR and SMA. Okay, so what we're going to see now is that the value, the ATR value is 1.221. So how do you make use of this information? So very simple. This tells us that over the last 20 trading days, this currency pair, Swiss franc against the Japanese yen, moves an average of about 122 pips a day on average. So what we want to do is to identify the lows over here, right, at minus 1.221. So what is the lows of this candle over here? So if you realize the low of this candle, it's 137.15. So I'm going to take 137.15 minus 1.22. Okay, so If I do that, I get 137.15 minus 1.22. That gives me a value of 135.93. Pardon the handwriting. So 135.93. So that will be my stop loss level. So I'm going to highlight that on the chart so you can see it. So over here, let's change this to red to signal that that is our stop loss. 135.93. So that is my stop loss. Okay. So now just to reiterate, right, why this level is our stop loss is very simple. Because this low over here, let's say this low, let's call it X, right? We minus 1 ATR. Okay, you know the value of this low is about, at that point in time was about, what did I say? Can't remember. But the low over here, right, is pretty much 137.15, right? And we minus off 1.221 as shown over here, which is 1 ATR value, and that gives us a stop loss of 135.93 as shown over here. Okay, so that's how we derive with our stop loss. Now, what about target? So many ways to go about setting your target, but for simplicity's sake for now, since this is the first example, we usually can set our target just before the recent swing high. So let's just change this to blue and set this as our potential target profit, right? So because this is, again, is an area of resistance, price bounce off once, come down lower, bounce off second time, come down lower. So maybe a third time you could hold up, right, and possibly reverse down from here. Who knows, right? Although this market is in an uptrend, it doesn't mean that, you know, the price will always go up forever. So this is this swing high over here could be a good reference point for us to take profit, where sellers might come in and exert some selling pressure over here. So this would be a potential level to set your target. Now, if you want to assess this from a risk to reward standpoint, you can actually use this particular tool over here. Click long positions, and you click this over here. So this one over here, you should put it at your entry point, and this one put it to your stop loss level. This one over here, put it to your take profit level. And you can see that over here, if you assess this potential trade, it's a risk to reward of 1 to 1.14. This means you're risking $1 to potentially make $1.14 for this particular trade. And just to walk you through this particular trade, right, what happens? Let's see. Eventually, the market did probably would have hit our target over here on this candle, right, giving us a profit. So if just to play safe, right, let's say you know there's some slippages, you didn't get filled. Eventually, this candle would have gotten you out with a profit for this particular trade. So this is an example of how you can actually use support resistance, right, to time your entry, right, and to identify, you know, trading setups in the market.